Hey investors, listen, I'm going to teach you how to trade options in under 10 minutes, so get ready for a lot of knowledge in a short amount of time. I started trading options with $2,000 almost a decade ago. I did not use all $2,000 because I wasn't willing to lose my $2,000 account. So I just traded a small amount of money, and you need to understand this if you're jumping into the game right now. You should only trade what you're willing to lose. For me, that was $500 out of my $2,000 portfolio back in 2014. I was learning a lot from my option trading internship when I was 19, but I still barely knew how to be consistent with it because working on the New York Stock Exchange was a tough time, and honestly, no one had enough time to teach me how to actually trade options. I had to do it myself. I had a very rough 3 years despite studying this stuff from someone who has been on CNBC many times as my mentor. I couldn't really make money because I was too aggressive. I really wanted to chase those fast gains, and I didn't fully understand the game of option trading. But when I finally figured it out, I took my $2,000 into $17,000 and then to $70,000, and the rest was history. Let me walk you through the ins and the outs in the shortest amount of time that I use daily to make over $100 a day, even when I had a few $1,000s to my name. Okay, here's how I like to make quick money. I look at the chart daily to see where the stock is moving. If it's rising, then that's what we would call at the hedge fund positive momentum. And if it's falling down, we call that negative momentum. So check it out. Here we have Amazon. Notice how it has positive momentum and look at the previous close. It's 103.81. And today, the stock gapped up to 106.96. This is a setup that I always look out for. I make easy money riding the trend of a stock depending on the direction if it is flowing. My boss on Wall Street told me to just keep it simple and keep it stupid. He literally said that and it blew my mind. He said, look at the chart and see where the stock is going. When you see momentum like this starting, you can jump in with a call option and ride the price action higher. Call options are way cheaper than owning shares of the stock. Take Apple as an example. So if you were to buy 100 shares of the stock, it would actually cost you $14,561. Very expensive, right? That's why buying shares is not as attractive as buying call options. And that's what is the beauty of option trading, is that you get a lot of leverage. You can control 100 shares without having to fork up all that capital, which makes this a very beautiful small account strategy. If you have a small account, buying call options can make you very wealthy very quickly. It may not be the best strategy because it's not as consistent, but if you're looking for the largest raw returns, this is going to be the video for you because you can do that by buying call options. And specifically, I recommend that if you want the largest return in the quickest amount of time, that you will buy call options before earnings. So when I was at Goldman Sachs, I did some studies and I was looking at the research. If you buy call options right before a company reports earnings, in a specific way, which I'm going to show you some examples of, then you can actually have a double on your money very short term, and this is a very proven strategy. Now, going over this example right here on Apple, okay? If I expand this 145 call option, you can see that the delta is 0.54. So actually, your chances of success here are a little bit higher than 50%, which is much better than the 1% option when you buy out of the money, or even if it's a 10% option, that's not good. The most successful traders and the most successful experiences that I've had is going to be options that are in the money. Since they have a higher delta than 50%, your chances of ending in the money and actually making a profit is again going to be higher than 50%. Now, the expiration date that I'm going for is December 16. But if you're watching this video in the future, all you really have to know, if you're buying a call option, then it's better to do it at least 1 month out if it does not have earnings. And if it does have earnings, then as long as you capture earnings, you're going to be in good shape. So let's go over this example of Apple, and then I'm going to show you a few different examples of how I would look at earnings and figure out if that company is going to beat or not. So here's the mechanics. Say that I buy this $145 call option. Now, if I go ahead and buy it, the total cost is going to be $870 per contract. As you can see here, my maximum loss is $870. That means the stock has to move a lot for me to actually break even. The reason for that is, although the strike price is $145, since the premium is $8.70, my actual break even is going to be $145 plus $8.70, or roughly $153.70. This is why buying call options is a bullish strategy. You want to make sure that the stock is going up, because if it goes up, you're going to profit. However, if it stands still, you can lose 100% of the premium that you pay, or this $870. And if the stock goes down, of course, you can still lose the $870, but the good news is about a call option is you cannot lose more than what you pay for the call option. So one of the benefits is you have a limited risk profile of just $870, but you have an unlimited upside. So if Apple goes up to $200 per share, this option is going to be in the money by $55. Now guys, I also like to make money when a stock gaps down. It's not easy because there can be a lot of volatility in the market, but if you can catch this, you can make a lot of money quickly with a put option. Buying put options can be a great opportunity to make money. Check out this trade I made for earnings on Airbnb. I knew that they were going to fall because I spotted negative momentum, guys. I saw the stock coming down, so I jumped in with a put and I turned $1,200 into $2,200 over a 3-day period. I didn't want to use too much capital because buying options can be risky. You can lose exactly what you put in, which I guess in some ways isn't too bad, but you can lose 100% of the premium that you pay. That's why, guys, limit your capital per trade. It's very important that you follow proper risk management and you manage every single position without losing too much money in any one of them. You don't have to buy low and sell high, guys. Your job is to spot opportunity. Please like and subscribe, guys. You can also make money selling high and buying low. That's right, you can sell high and buy low. So guys, please put in the work to learn this skill. If you need me, I have a Discord teaching all of this and sharing my trades in the description. Be safe and consistent, my friends.